The likes of Monzo and Revolut use bank as a service, and if you're using Chime or Varo in the US, they're using banking as a service providers today to deliver better, faster, cheaper financial products because they don't have to build all of the infrastructure that it needs underneath it. Banking as a service is the provision of complete banking processes, such as loans, payments, or deposit accounts. Providing them as a service using an existing bank's licensed and secure infrastructure with a modern API platform from a specialist type of new provider or vendor. These providers partner with those banks, and then Bank as a Service allows almost any brand to embed financial services into its customer experience by making things much more modular, much more pick and choose, so they can choose onboarding, fraud, payments from lots of different providers. And this is used for things like checking accounts, current accounts, savings, payments, and increasingly it's moving into lending. Example brands that are using Bank as a Service today include Uber Money, Apple Card, many others. And even in the early days, the likes of Monzo and Revolut use Bank as a Service. And if you're using Chime or Varo in the US, they're using banking as a service providers today to deliver better, faster, cheaper financial products because they don't have to build all of the infrastructure that it needs underneath it. That could be really powerful, and that could change what's possible in the market. There are a number of regional differences between how Bank as a Service plays out in Europe and the USA. In Europe, for instance, we've seen providers such as Wirecard, Solaris, and Railsbank really be at the forefront of a lot of the new fintech disruptors and innovations that came out. I mentioned previously Monzo and Revolut, but also everybody from Curve to Anna Money to the likes of Tomorrow Bank and Penta in Germany work with Solaris and Wirecard and many others. This meant that fintechs could get to market quickly, cheaper than deep integrations with traditional banks. And that showed an interesting model. The US has a slightly different approach and is perhaps getting very hot in the bank as a service market at the moment because of a quirk called the Durbin Amendment. The Durbin Amendment makes banking as a service particularly interesting in the US. Now, if you're not a reg nerd, go with me on the Durbin Amendment. The Durbin Amendment was passed after the financial crisis in 2010. And basically what it says is that very small banks are allowed to charge higher interchange fees. This means every time a customer walks into a store with their credit or debit card, the merchant, in other words the shop, is charged a small percentage of that transaction, in other words to accept the money from you. Now this is interesting because the big banks don't make as much money anymore, but the small banks do. These specialist providers partner with those small banks and then are able to pass on some of that extra revenue to the brands themselves. So the Marketers, Galileos, Synapse, Bond, all of these new providers are able to partner with small banks and partner with brands to do something really disruptive and interesting. So this is why I think the US bank as a service market is particularly hot. But let's not forget, we are seeing providers like Cielo in Brazil work with WhatsApp and Facebook. We are seeing Tutuka and GPS really through a lot of Asia as well. There's going to be an interesting journey for bank as a service as we move towards embedded finance in the next few years, that's for sure. What's next for bank as a service? Well, you may have heard rumors of many big IPOs and many big raises for companies like Marketer, SoFi acquired, of course, Galileo. But actually, I think we're going to see three things. One, we're going to see more niche fintech players as the cost is cheaper than ever before to produce a brand new banking offering. Two, every company becomes a fintech company. Every brand can deliver fintech. Three, the emergence of embedded finance. What happens when brands are no longer creating just financial products that we knew before, but embedding it at the point of need? Friend of 11FS, Simon Torrance, talks about the $3.6 trillion opportunity of embedded finance. So what should banks do to take advantage of this? Should they compete and offer their own bank as a service provider? Should they collaborate? Well, we've seen Goldman and BBVA build their own bank as a service offerings, BBVA with Uber Money in Brazil and Goldman with the Apple Card. And we've also seen lots of smaller banks partner with the likes of Marketer and Galileo and others. So this is a super interesting market. It's definitely in its infancy and it's only just getting going. So there's lots more to come. If you want to find out more, find us at 11fs.com.